Welcome to the India Fintech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India.
Hello, everyone, and welcome back to India Fintech Diaries. I am Hemant, and I'm joined by my co-host Elroy. How are you doing, Elroy?
I'm doing great, Hemant. This week we continue on our series on WealthTech, and we look at the entire investment space more in detail this week, right? So retail investment has been on the rise even before the pandemic hit, and COVID-19 has definitely been a major accelerator that has led to the inclusion of scores of first-time young investors into the market. But as more of India starts investing and managing wealth more actively, we thought it would be great to speak to someone, be able to shed more light on this. So today we'll speak to India's leading digital wealth management platform to get deeper insights on how Indians are managing their wealth. It is a pleasure to welcome Mr. Subramanya S V, co-founder and CEO of Fisdom. Welcome to India Fintech Diary, Subu.
Thanks, Elroy. Great to be here.
Subu, before we deep dive into this entire topic, it'll be great to understand the story beyond Fisdom and a little bit about your background as well.
Sure, Elroy. Thank you so much for having me. We started Fisdom in 2016. We launched in 2016. Prior to starting Fisdom, I was a venture capital investor. So I spent about 9 years at Besima Venture Partners, first 4 years in Mumbai and then a few years in Bangalore. And as part of BVP, I invested in a variety of consumer internet companies. So I was witness to the first wave of consumer internet adoption in many industries, including e-commerce, transportation, food. And come 2015, I had reached a stage where either I had to continue investing or I had to do, entrepreneurship. And by 2013, I had started thinking about, look, I want to, if I don't start now, I'll probably do never. And I thought in 2015, this is the best time to be in India to be an entrepreneur. So I decided to quit my, fairly interesting VC job. And I have said this multiple times. Venture investing is the best job in the world. And the only thing that trumps is that of a successful entrepreneur. And I decided to make the trade in 2015 to see, hey, listen, look, can I be a successful entrepreneur? And hence I decided to quit in 2015. Now, having quit BVP in terms of what to do next, financial services was a very, very natural opportunity for me personally and my co-founder Anand. Both of us come from this background. We've spent years in investing and investment banking, understand the market landscape really well, and also from a disruption perspective, from a technology adoption perspective. Clearly, we felt financial services would be the next frontier where technology will play a significant role in a variety of roles like access expansion, cost reduction, product innovation, which we can talk in detail. So we decided in 2016 we're going to start Fisdom as a company that will help customers manage their money. Financial services from a retail customer's perspective, if I just to define, it's payments, wealth, insurance, credit. So those are the four primary ways in which the user looks at it apart from a bank account. And we said we have to make a start somewhere. Let's start with investments. And within investments also, we decided to start with mutual funds. So our first product in 2016 was we just enabled people to invest in mutual funds in a seamless way, completely digital fashion on the Fisdom app. That's the basic premise of our first app in 2016. And in 2021, as we look back, it feels like this is, how hard it can be. But believe me, in 2016, it was really, really hard. This was before UPI and this was before demonetization. And KYC was completely, this was before the Aadhaar wave as well. KYC was painful. We had to digitize KYC. We had to figure out a way to use payment gateways, integrate with exchanges, multiple subsystems. Many of those problems have got solved subsequently. We had to do a bunch of innovation and we launched that product. Subsequently, we've been adding one or two more products every year. So we launched pension funds in 2018. Then we added insurance. Earlier this year, we added stock investing, direct stock investing, and mass affluent HNI products. So that's been sort of our journey, Elroy. So obviously, I can, as an entrepreneur, I can keep going at it. So I'll pause there.
That's pretty interesting, Subu. I think that helps me kind of dovetail into some of the larger macro level questions that I had, right? So let's start with this very simple stat. If you look at some of the recent reports that come out on WealthTech, the market in India is expected to reach about 63 billion by 2025 from a base of about 20 billion in 2020. And the number of WealthTech investors in this market is expected to go 3x and reach about 12 million by FY25. Now, obviously, the market is growing fast. There's a lot to be done as well. So, what's your read of where this wealth tech market is headed, especially given your background and being one of the pioneers in this space and starting in 2016?
Yeah, no, I think it's a great question, Elroy. So the way I see it is, India has always been an underpenetrated market, right?
Yeah,
Look at the number of people who have who access non-bank, non-LIC products, right? Is a
right.
very very small portion. And this story of underpenetration of access to financial products is has been true since times immemorial, since we were born. Possibly, probably if you look at the 1995 or 2000 to 2005 BCG report, it will still say the same thing. Oh, India's market is underpenetrated compared to GDP, and etc. Right?
In fact, Subu, they actually say that today also. I was reading a report by Jeffries that came out a little while back. In this report, they also mentioned that compared to other economies, AUM penetration in India is very low.
It's still low, but a few things have changed in the last 5 years, which gives everyone confidence that, hey, listen, look, probably the next 5 years we're going to do better than the earlier 5 year periods, right? I think the first one is just the whole access layer. Thanks
Yeah,
to technology and digital, it's way easier today to access products, Aadhaar, mobile, all these convergence has happened dramatically, and today it's the whole access problem that people used to have, where you had to sign papers and complete the KYC and wait for a few days to do somebody to come back to you and then invest. The whole process has just got disintermediated with this whole onboarding, the ease of access, right? So technology, this whole Aadhaar, all of this is playing a really really huge role. I think the
yeah,
second is I believe the whole internet wave that we saw before 2015, where the likes of Amazon, Flipkart, Ola, Uber, Swiggy, all of them invested billions of dollars to educate the customers about transacting on the internet. I
yeah,
think today we think we take it for granted, but there was a time 5 years ago when people didn't have faith in online transactions, and by large, even most sophisticated Sec A population would hesitate to use their credit cards online because of various reasons, right? So I think the consumer internet wave of the first half of 2015 made sure that a large number of customers were comfortable dealing online, dealing with money, just even a payment,
mm,
a monetary transaction, right? So that I think was a huge foundation for what we are seeing. And the third one is other structural factors. If you see in India, Indians have traditionally kept wealth in fixed deposits. I mean, broadly bank deposits, gold
yeah,
and real estate, right? Gold hasn't had a great run in the last couple of years. Till 2011, it didn't make any money. Demonetization and RERA Act made sure that real estate is not a great asset class. And then finally, bank deposits, where we all were used to getting a 10% interest rate as early as 10, 12 years ago, and the interest rate started falling. Today, a fixed deposit gives you a 4 to 5% return. So
right.
the traditional places where Indians used to keep money in, they are not viable anymore. So where do you go? And that money has to flow into other places, which is what I call India is on a 10-20 year trend of financialization of assets. And the fourth and the final factor is just the sheer demographic factor. India is a much much younger country. Every year we throw out 15 to 20 million graduates, and they're all tech first. They're all digital native people. So if they have to avail a service, they are going to look first on their mobile phones on App Store and Google Play and Google, and not ask their uncle and auntie, hey, where should I invest money, right? So I think these factors have contributed immensely in what today we've seen the whole wealth tech wave over the last couple of years, where just the sheer number of people who are accessing products has just dramatically increased.
Yep, absolutely, Subu. And Subu, in the end, you touched upon this point of customers, and we look at last 5 years, which is basically from 2016 to 2021. We have lived in times where the pace of change has been extremely fast. Unlike earlier, when generations used to change, say in 10 years, today our generations are changing like 2 years or 3 years. So you have had a ringside seat to seeing the change in wealth management behavior that Indian customers have gone through. What are some interesting insights into that?
Yeah, no, absolutely. So, the first sort of a trend, Hemant, is do it for me versus do it for you, do it yourself, right?
Yeah.
I think one of the cultural changes, if you will, or rather the behavioral changes that has happened in customers at large is to be able to do it on their own. I'll give you an example, right? 15 years ago, just go back to pre-Ola days. If you had to go to an airport, you would book a cab, and usually this is a city taxi or somebody where you would have called, and if you had a flight next day morning, half an hour before you have to leave, you will start calling the guy. Where are you? What time will you reach? You're just anxious about the guy, so you would proactively reach out to him and speak to him. Today you book on Uber or Ola to the airport, and let's say the guy calls you to ask you where is the address. Your reaction is likely to be, please see the map and come, right? Basically the
Right.
tendency is to eliminate unnecessary human interaction, right? I will deal with whom I need to, otherwise I don't want to deal with it. Just see the app and sort of come to it, right?
Right.
And this is bound to have a rub-off effect on the way we deal with money. The second sort of a big trend that we've seen in the last 5 years is, in general, the average risk-taking ability of Indians has gone up. This 5-10 years ago, we used to hear investing in stock markets or mutual funds is like gambling. The only way to keep money safe is either keep in bank or gold or real estate, and everything else is sort of not par for the course. I think that perception has significantly changed. And today people are willing to take risks and invest money in where they think, they can make money, and which is also explained in, dramatic explosion of crypto assets also in India. So I think that's the second trend that we've seen in the last 4 years, which is people are willing to take more risks. And the way I would say it, the average risk taking ability of Indians has gone up over the last 4 5 years. And the third one is, as I said, due to the low interest rates on the bank deposits, there is a significant tendency to say, hey, listen, look, anyway, I'm getting like 3% post tax. I might as well, try in the capital markets and move money over there. So I think those are a few things that we've seen in the last, 5 to 10 years, Hemant.
So that's very right in some of the insights you've drawn out. And another thing that I personally noticed is, at least when I started investing into the markets, right? At that point of time, for me to invest in a mutual fund, the only options were to either go via a broker, and then at that point of time, direct funds kind of just started opening up. You could actually buy a direct fund on MF's website, but there was no platform that aggregated everything. And that's one big change we have seen in the last couple of years, that digital wealth management platforms have started transforming the way people manage their wealth as well. And it's making it a lot more accessible and affordable to a wider set of people. Can you help us understand how such a platform such as yours would work and some of the factors that are helping drive its success?
Yeah, absolutely. So, Elroy, the role of a digital wealth platform, the way I would say
Yeah.
is, can do a few things. Okay, from the market perspective. Once we've established, look, there is a large market and there are drivers to increase the penetration of that market. Typically, the roles that people like us perform would be, one is just provide access, make it
Right.
really, really easy to get onboarded, make a payment, buy a product, whether it is through payment integration, all of that. It's the whole access layer where wealth tech platforms have done a terrific job.
Yeah.
That I would also include, for example, ability to invest in an IPO through a UPI, lock-in. I think that's just a
Yeah.
mind-boggling innovation that just has enabled so many people to apply for IPO in no time. Similarly, the whole Aadhaar-based onboarding, e-sign, all of them have significantly helped people just become onboarded and being able to do transactions. So the first one is, I would classify it as access. Okay. The second one is customer experience. Compare this with being able to buy something on the mobile app with no friction. Compare
Yeah.
that with signing papers, sign a KYC form, attach your address proof, attach your identity proof, give it somewhere, self-attest it, and wait for 3 days, and just the whole experience that digital wealth platforms provide compared to, let's say, any other offline world. Not to say the least about not having to interact with any agent or anybody, right? I think the whole experience that digital wealth platforms have provided is just top notch compared to what we were all used to. The third one is around cost reduction, right? When you deal with an agent, invariably there will be some other cost. For example, an agent also will try to sell you an LIC policy or a ULIP or so on and so forth. So there's always a cost element when you deal with the physical leg, and the moment you are online, you can buy the cheapest product and in the fastest sort of possible way. So third role, wealth tech platforms do is to just cost reduction, and cost reduction is not just in terms of monetary cost. There is also a lot of time cost involved in financial transactions, and digital ways of doing just reduce that transaction that cost as well. A fourth one is product innovation. We've not seen as much in the last few years, but we're going to see that significantly in wealth platforms in terms of product innovation, providing advisory, automated portfolio rebalancing. How do you provide customized advice to customers, individual customers, rather than telling everybody, hey, listen, look, buy these 3 funds or buy these 4 stocks? Can the advice that I get be different from the advice that you get or Hemant gets? So I think there's a scope for product innovation. And the final one is, because digital also gives you access to a lot of data, ability to segment customers and target them becomes significantly higher. So there could be somebody who just focuses on millennials, whereas somebody could be focused on tier 2, tier 3 towns. Or there could be somebody who just focuses on urban reach, right? So wealth tech enables us to do all of this, specific play these specific roles.
So, Subu, that actually solves for the platform side of the equation, which is making sure that there's a good enough platform for customers to use. But in your opinion, what can be done by wealth tech firms and policymakers to solve for the demand side, which is to help get more investors to the capital markets?
Yeah, so in the last 2-3 years, Hemant, Elroy, you would have seen demand side has not been an issue.
But if you still look at mutual fund pickup, right, it's not been as much as, say, the amount of money that's gone into the equity markets directly in the last couple of years.
Yeah, I think the reasons for money to go into equity markets is more fueled by one segment of population, which is typically the millennial segment, which has been very, very open to opening demat accounts and applying in IPOs and buying and selling shares, right? But even if you look at even the mutual fund numbers over the last couple of years, the assets under management have largely doubled, and the number of customers who are investing in mutual funds continues to grow, but obviously not at the pace of direct stock investing. I would say from a supply side perspective, most of the problems are resolved. From a demand side point of view, what's really remaining is customer education. The top 5% of the country are familiar with what's going on. What's a mutual fund, what's a stock, what's a PMS, what might be a right product for me. There is a certain amount of education. Now, the next task is really a large scale education about what these products are. Okay. And I think the regulator is doing reasonable amount of work, but I wouldn't say it is sufficient. I think we believe the potential for India right now in the next 3 years alone is about having about 10 crore investors who are investing in both indirect routes like mutual funds, and also direct routes like equities. So that's the sort of potential. But I think that can happen only with very, very large scale education about what these products are, and just understanding. Like, for example, we still hear in 2021, we hear questions from people about, hey, listen, which is better, mutual fund or SIP? Just to give you an example, right? And I think that is more of lack of education than lack of awareness. So are they aware about mutual funds? The answer is yes. Are they educated about mutual funds or stocks? The answer is no. Right? So the next big sort of adoption will come through significant education.
Subu, you touched upon factors such as the India stack impact and the UPI impact that has had on the wealth tech adoption overall. So, two-part question. What are the regulatory and government initiatives that have been taken which you think have had the maximum impact on the wealth tech? And second being, things such as account aggregator. There is a lot of excitement around account aggregator having an impact on lending, but there is also excitement around the impact it may have on the wealth tech market itself. So what's your opinion on both of those?
On the first one, Hemant, I think SEBI has been extremely forward-looking when it comes to market expansion. I think financial inclusion is one of their core agendas, and I think they've done a terrific job. This whole Aadhaar as a central force, right, for onboarding customers. linking Aadhaar to bank account number, and the whole ecosystem has been absolutely terrific. So today we can onboard customers for capital markets via Aadhaar in literally like 2 minutes, right? And second, we can, through the whole payment systems and the Aadhaar stack, we can verify customers' bank accounts with one penny drop, again in no time. So the whole friction that used to be there before has been completely eliminated by this whole Aadhaar stack. So once you get customers onboarded, right, then I think rest of the product portfolio and the product roadmap takes over. Like for example, ease of payments is a big deal. 4 or 5 years ago, if you have to buy something, you have to do an NEFT. Before that, you would add as a payee, wait for 24 hours, then transfer money, then buy something. And all of that has now gone away thanks to some really amazing payment gateway integrations and UPI, etc. So I think the big role that regulator has played is in standardization and simplification, and I would say automation of onboarding processes. And of course, regulator has also brought in lots of compliance norms, which obviously helps companies take care of their customers' interest. On the second part of your question on this whole account aggregator, I think that's going to be a huge needle mover probably in the next 2 to 5 years, Hemant. Right now, it is most useful for lenders, as you said, because lenders don't have sufficient information. So, account aggregators, this whole framework gives them access to data that otherwise the customer might not be willing to give them or might not have access to give them. Now, wealth, when it comes to wealth, particularly automated or digital wealth platforms, the way it works is, in fact, even in offline wealth management, the capability of a wealth management platform goes up with more information about the customer. Very simple. If I know more about you, I'll be able to do better in terms of my own, recommendations or advice to you. Today, if I were to do a financial planning for you, it's a very, very painful exercise because I'll ask you to fill up a 5-page form, and you will, after 2-3 minutes, you will say, "Look, I'm bored. I can't do this anymore." And many a times it's hard. Even it's not even like it's hard to sort of even actually write those answers. For example, if I ask you, "What are your total annual expenses?" Or let's say if I ask you, "What are your monthly expenses?" Frankly, you have no clue.
Absolutely.
Let's say my kid's annual school fees. Should I divide by 12 or should I exclude it? Right, just little. Right?
Yep.
So the whole task of getting information from customers to be able to provide superior advice slash value to customers, right? It's very, very hard in real world. And what account aggregator will solve that is at least some parts of this information will come in a very, very structured format. For example, what other assets do you have? You might not remember off the cuff, but if there is a structured way to retrieve this data, or what liabilities do you have, or what other forms of protection products you own, I think that will just take away a lot of drudgery that humans do in terms of financial planning, and that can just be fed to an engine, and that throws out a certain recommendations based on risk profile. And it could also be the output could be a combination of really low cost investment. So right now, account aggregator is still early. I don't think companies that keep the customers asset side information or the liability side information have kind of signed up in a big way, like CAMS and Carvi and AMCs, wealth management firms, PMS, AIF, all these providers. I think they will onboard themselves as a both financial FIU and FIP over the next year or two. And once that's done, I think ability of wealth tech platforms to be able to deliver targeted recommendations and products and services will go significantly higher. And we all have to step up and make sure we are on the track.
Absolutely, Subu. Subu, at India FinTech Diaries, there is this theme of embedded financial services that we are very excited about. And Fisdom has clearly been a big and early proponent of it. So you have partnered with multiple banks to provide your wealth management products to their customers. Help us understand how does that model work and what has been the traction that you have seen on it.
So the way we work, Hemant, is we build a consumer product. So Fisdom is a mobile app. It's a consumer product that anyone can download and start using. But the way we reach end customers is through these bank partnerships that you mentioned. So we rarely do Google or Facebook kind of advertising to reach end customers. We partner with banks, and the reason for partnering with banks is in India, banks have the widest and the deepest distribution reach among all financial institutions. If you compare them with, let's say, insurance companies or asset management companies, banks have the deepest distribution. Even if you go to a tier 2, tier 3 town, you will find a bank branch. And
Right.
also, trust in banks is by and large very, very high. Okay. And part of the reason is no customer has, or rather, a customer has very, very rarely lost money in a bank deposit. And thanks to RBI's very, very stringent way of working, each time there is a bank in trouble, they find a way to make sure that the retail depositors are not affected, right? So
Right.
there is distribution and trust, but they are not doing some of the stuff that they should be doing. Some of the larger banks like ICICI, Axis, HDFC banks, they have figured out this whole wealth model. Being able to cross sell wealth products to their customers is something that the larger or the new age private sector banks have figured out. But if you look at the banking ecosystem in India, there are about 40 banks. There are 5 good quality banks, let's say large banks: ICICI, Axis, HDFC, SBI. And then there are large number of tier 2, tier 3 banks. This includes old age private sector banks like Karnataka Bank, City Union Bank, and PSU banks like UCO Bank, Indian Bank, Punjab National Bank. These banks have traditionally followed the old banking model, which is borrow, retail, sell, corporate. Right? They would borrow from us. We would give, people like you and I would keep deposits at 4%, and they would go and lend to a Reliance or a Adani at 10% and make a 6% spread, and
Right.
that defines their margin structure. What happened is the whole NPA crisis just pushed that business to the brink, right? The whole borrow, retail, sell, corporate model just was not viable. So as a result, these banks have been forced to look at retail in a big way. So if you look at any bank's presentation, corporate presentation, you will find digital and retail to be the most important buzzwords. So if you talk to
Right.
any banks, he will say digital for 20 times, retail for another 10 times. So we said, look, why don't we work with these banks who have built large scale customer base and deep distribution across the country, and work with them to reach their customers for our product rather than building our own distribution railroad? Because ours is a business where trust is a big deal, right? We are taking money from the customer. We are not a lender. We don't give money to the customer. We are take money from the customer. So trust is an important thing. How do we build trust? By aligning ourselves with someone who has bigger trust than you, right? Who enjoys better trust than you. So that's was the genesis of the idea for working with banks. We started with our first bank in 2016, and today we work with about 12 banks, and very soon we'll be live with 3 more banks. And the way we work is banks customers can access Fisdom directly. They can go to Google Play or App Store and download. Or we also have, which is a bigger way of reaching customers, is we have integrated Fisdom app into the bank partners' mobile apps. So Fisdom is SDK that sits inside partner bank's app. So inside, let's say, a Karnataka Bank app, there's a wealth management tile, and the user clicks on it, and Fisdom comes up. And the subsequent user experience, user journey, transaction, everything is handled by Fisdom's product, right? And that has worked out really, really well for us. All the banks in our target segment, they all realize the importance of engaging customers through other products other than deposits and loans. Like deposit, you don't open your bank account to check your deposit balance every single day. It just doesn't change. Whereas and the customer walks into a bank or asks the bank for a loan, once in 3-4 years. Very infrequent use case. How do you build engagement with the users? And the best form of engagement for a bank is actually investment product, because there is a daily value chain. And in fact, if you include stocks, there is a by minute, second by second value chain. Right? So it's a great way to engage the customers and also generate some additional fee income. So as a result, this model is now really working well for us. And in terms of products on our platform, we offer mutual funds, stocks, pension funds, tax filing. So these are the 4 primary products on our wealth platform for banks, and we also offer insurance and PMS AIF for our mass affluent customers. So we cater to retail customers, and we also have a separate unit, Fisdom Private Wealth, which just caters to mass affluent customers who have an investable surplus of 25 lakhs and above. And this all happens through the SDK that is integrated into the bank app. But our SDK and the Fisdom app standalone are interoperable. Customers can start a transaction, come and complete it here, or do a transaction here and go and check out the reports there, so on and so forth. I think it's worked out really, really, really well for us.
And Subu, in your answer for that question, you have actually touched upon my next two questions that I had. So what I'm going to do is I'm going to blend those two together. So one, Subu, that you highlighted is the recently launched this year additional offerings on the private wealth, the tax filing, and stockbroking. So we want to understand what's the thought process there as you start adding these other offerings in addition to the one that you already had to your repertoire. And the second is we understand Fisdom and really appreciate the offering that Fisdom has. But for our users who have not used the platform yet, can you also explain the entire set of value proposition that the user can benefit from when they come to Fisdom?
Yeah, sure. I'll get to the first one, Hemant. So we believe tax is a important piece of the broader wealth suite from a customer's perspective. It is it's not a it's not a product. It can be only be a feature because it's a very infrequent use. You would file your taxes once a year. That's it.
Right.
You're not bothered about it, right? So as a result, for us, it's an important feature. The reason is when you file your taxes, you give very, very granular data about yourself. And we talked about account aggregator, right? Account aggregator is one way of getting customer information. Customers' tax filing data is another way to get customer information because there you define what's your income, what's your expenditure, do you have insurance, do you have investments, do you live in a rental house or an own house, do you have a housing loan? Like this whole information gets captured in tax filing, right? And that's an important sort of way to understand the customer. We can't use it directly, but it's an important piece of the wealth puzzle, right? And we help customers file their taxes or manage their taxes through tax saving. Their trust in us to do other things sort of goes up. So it's a once a year sort of a feature. Right now, there's a tax filing season going on. So December 31st is the last date. So we're seeing large volumes over there. Stockbroking is, as I said, in the evolution of India, the last 2 years, of Indian customer rather, in the last 2 years, clearly direct stock investing has surpassed, indirect investing in the form of mutual funds. Now, we felt, look, this is something that's probably a longer term trend. This is not just a 2 year trend. It's a bull market phenomenon for sure. If markets cut by 30%, there would be surely a winter. But then again, this is a market that we need to be there. And also our bank partners and everybody started asking, customers started asking, hey, listen, look, I'm using your Fisdom for my investment, but for stocks, I have to go elsewhere. And then we said, look, this is an important product. And, unlike other products, launching stockbroking takes time because it's a very, very heavily regulated product with very significant technology and product investments upfront. And in some sense, broking product is also sort of antithesis to a startup. In a startup, you launch an MVP and you rapidly iterate and you get to a large product, right? Whereas in broking, your first customer comes after you have the full blown product. So we started working on this a year and a half ago. So we started working a couple of months after COVID hit. Right, and it took about 15 months for us to build a whole suite. So today we've gone live with a very, very comprehensive suite of broking products across cash, FNO, and currency. So this is very, very much essential for our bank partners and the customer. So we believe direct stock investing is just a natural extension for what we were doing in terms of mutual fund. The final part on the mass affluent segment, again, it's a channel product sort of an issue. When we partner with banks, right, we get access to the bank's digital properties. But what we realize is we also get access to banks' HNI customers. Like every bank branch, like our partner bank, Karnataka Bank, has some 800 branches. Each branch has about 250 to 300 rich customers. And these include FD customers, high FD customers, locker customers, OD customers, etc. And by taking a pure retail approach, we were not serving these customers. We were not able to serve because our product was really built for someone who wanted to do a 5,000 rupee SIB or at best invest 1 lakh rupees or 5 lakh rupees, right? It was not made for someone who wants to invest 50 lakhs because the needs of a 50 lakh rupee investment from a process perspective is a little different from what would it take for someone to invest 50,000 rupees. So that's the reason, given that our bank partners give us access to such, large variety of wealthy customers, we said, look, we have to do a focused approach to it, and we have to build a dedicated product for it. And hence the reason for foraying into, to the mass affluent segment, which we call as Fisdom Private Wealth.
Subu, that's some very interesting insights in the overall structure of your product set. I'm also curious on how does the technology for this work? I'm sure you must have faced many tech and non-tech challenges while you were building out Fisdom. Could you also shed some light on this as well?
Yeah, absolutely. So the first 2 years were obviously very difficult just for the first product that we went live with Elroy, the mutual
Yeah.
fund investment alone, right? Because when in 2016, 2017, the infrastructure was not as mature as today. There is exchange where you push the transactions to. Payment gateways is another bunch of people. Then there are all these camps and Carvi who work on behalf of AMCs to send you the whole transaction
Yeah.
feeds, confirmations. Then you have these KRAs like CVL, etc., which keep the customers, KYC document, whether the customer's KYC completed or not. So to build one holistic, transparent interface that customers can use, and you in the backend integrate these four things, right, was a significant challenge. And it's not just for us; it was frankly true for most of the guys you see in the market today. And obviously, subsequently, now it is much easier, although regulatory wise, it's become a little bit more stringent for good reasons. So just putting together the ecosystem partners and making them talk to each other. If one system is down, your system is down. So how do you build?
Right.
How do you build
Redundancy there.
redundancies? How do you make sure you don't have a single point of failure? Those were all the initial set of issues. Okay, the technology systems when it comes to stockbroking, the NSE, BSE system, they are much more robust because there's a lot more at stake. So they're much more robust. When it came to pension funds, we had to do a lot of innovation ourselves. Finally, and most importantly, the bank partner integration, right? I think that took a lot of effort. Like imagine we were a fintech company, we were trying to integrate our app into a bank's mobile app. And as you know, banks have stringent regulatory norms. They're all governed by RBI, security regulations, CISO norms, so on and so forth, right? And to be able to do that integration in a manner that is seamless, at the same time takes into account all the regulatory and security considerations, yet provide great user experience to end customers, right? I think that was a significant challenge. These bank technology systems are not the new age cloud mobile systems, right?
And they're also not standardized in any shape or form.
Correct. They're not even standardized, right? So I think that our first 2, 3 bank integrations were like 4, 5, 6 months long. But now we found a way where any new bank that we sign up with, we can go live in like 15 days, 15 to 20 days time. We could go live. Our API documentation, our SDK documentation is very very standard. Much like a Razorpay SDK documentation. Anyone can look at it and just kind of start working on it. Obviously, we don't. Our SDK and API documentation is not public; it's only for partners. So those were some of the challenges we've had to go through over the last 4, 5 years. Right.
And what about scaling? Did you face any challenges as the number of customers on your platform started growing? I'm sure you must have seen spurts of immense growth in the middle as well, right?
Yeah, no, I mean, I think we've generally relied on cloud,
Okay.
auto scaling cloud to that with some limits. So those have been, at least that hasn't been so much of an issue. But yes, a few months ago, we hit our API limit, concurrent API limit, right? People were not able to log in for 10, 15 minutes. So we had to sort of fix that, constantly keep an eye on, what's the capacity that's being utilized and how do you make sure that you're constantly aware of any significant load on the system. So we've had our learnings. There have been a couple of instances where suddenly we've not been able to get into customers because guess what? Just the number of people logging in has been higher than what we had imagined 3 months ago.
That's very interesting, Subu. I guess it's depending on how you look at it, it's either a good problem to have or something that's gone terribly wrong.
So the way it works is,
Yeah.
customers also react differently, Roy. I mean,
Yeah.
some customers who have a reasonably good, faith in the system, right? Faith in the company, faith in the product. If they're not able to access the product for a few minutes, they say, "Hey, listen, look, something is down. Okay, I'll come back." Right? But people who've just invested a day or two earlier, who are still figuring out whether they should trust the product or not, they get jittery. Hey,
They
listen,
get very jittery. And then you'll see social media go alive with all sorts of comments. as
yeah,
well.
yeah, yeah. In fact, I keep joking to my CTO. The best thing that has happened in the last 2 years is Facebook, WhatsApp, Google, all three have gone down.
Yep. And not to mention Amazon as well. AWS went down twice, I think, in the last 2 years.
Yeah. So I'm like, not just external customers, even our own teams, right? Some of the people
Yeah.
don't come from the tech background, they would always look, what is this? Why is this happening? And now after seeing Google and WhatsApp and
Yeah.
Facebook and AWS go down, they say, okay, fine, look, okay, look, I think this is a human problem. It's bound to happen, occasionally, maybe, hopefully not more than once a year, but we just need to get our act together and get our, get ourselves up and running. We have, and we've taken the same remedy what others have taken.
Subu, just looking to the future, right? What is the next big thing for Fisdom? What are you most excited about on what you're working on, and what are you looking forward to in the next couple of years?
Yeah. So look, the way we look at Fisdom is we provide technology-based solutions to customers across savings, investments, taxation, and protection, right? And
Right.
with that, the kind of capabilities that we've built are in the process of building are distribution, advisory, and at some point of manufacturing. So
Right.
we do a great job of distributing products, third-party products. So we don't make our own products, right? We are not an AMC. We distribute third-party products. We've got a great advisory layer on top of it, where customers on the Fisdom app, it's not just a do-it-yourself or a marketplace like some of the larger competitors in the industry.
Yeah.
Customers actually can decide, where to invest, of course. Other than that, we also have some interesting advisory pieces. For example, customer can just say he wants to invest 5,000 rupees, and the app, based on the risk profile and a variety of other factors, recommends where to invest in. That's easy. Then we also do automated portfolio rebalancing. For example, you've been investing for a few years and you built up an asset base of 10 lakh rupees. Let's say there is some external market change and your portfolio requires a review. This in the offline world happens once in 3 months. But on the Fisdom app, the portfolio is watched on an ongoing basis by the algorithms. If there is any change that is required, for example, let's say a fund manager gets changed or a strategy of a fund changes, then automatically the portfolio is rebalanced. The customer gets a notification, one why, how, etc. The customer agrees, and the money moves from fund A to fund B. And then also there is high quality advice at the time of redemption. Like when you built up 10 lakh rupees, if you want to sell 1 lakh rupees, let's say, right? Which ones do you sell? There's tax implication, load implication.
Right.
Which ones do you sell, right? So I think those are some of the features that are available. So we built some layers of advisory, but I think we'll be investing in sort of much more building in strong advisory capabilities for mass and mass affluent customers. The third piece is the manufacturing piece. Now, once we build our distribution and advisory capabilities, it's only natural extension for us to start creating our own products. In terms of not just selling third party products. So we'll have a nice mix of third party products and our own products. For this whole stack, we will cater to both retail and mass affluent segment. Retail is what I call as sub 25 investable surplus, and mass affluent is or the private wealth business is more than 25 lakhs in investable surplus. I think this whole approach to being able to serve the mass affluent segment through a product approach, right? Through a technology solution. I think that is really, really exciting for us right now. Okay. The market is just huge. And I think, people are not paying attention that we are one of the few guys who have access to those customers through the bank channel. So that's one thing that we're really excited about. Second is the bank channel. The number of partners that we work with continues to grow. So today, as Fisdom, through our bank partners, we have built an exclusive customer base of nearly 40 crores, right? And these are exclusive branded partnerships. These are not white labeled partnerships. So all the transactions, etc., happen on our brand, on our regulatory license. So now that we've built the product portfolio and built a distribution channel, now it's about executing and getting a really large or a significant share of these customers. That's something that we're excited about in the next 2-3 years. And the third and final one is at some point in the next few years, we will move away from just being an intermediary to full blown financial services platform, including manufacturing. So those are a few things that will keep us busy for the next couple of years, Elroy and Hemant.
Very interesting, Subu. Subu, if someone wanted to get in touch with you to know more about Fisdom or to just understand more about the company, what's the best way to do this?
A few ways. One, I would sincerely request as a first step to just go to Google Play and download Fisdom app. Okay, that's one way to sort of just try the app and get to know the app. Fisdom is present on all the social media. We would be very happy to respond to any queries people would have. from a help, I am on Twitter, Subramanya_SV. Please do reach out with any thoughts, queries you would have. Would be very happy to engage. Same thing on LinkedIn. We have a fairly active LinkedIn presence as well. So social media, email, and the app. I think those would be the three best ways for us to sort of reach. And finally, sorry, I forgot to give the email. So we have a generic email, ask@fisdom.com. Please do write in, and we would be very happy to kind of respond to any queries that your listeners might have.
Awesome. Subu, we will include those details in the show notes. And thanks a ton, Subu, for taking out time and speaking to us.
Thanks so much, Hemant. Thanks a lot. This was great fun.
That's it from India Fintech Diaries for this week. Do log on to our website, indiafintechdiaries.com, for exclusive content. And until next time, stay safe.